This is part of what crypto is and how it works, which is there is a news event that caused the price to drop. There's a lot of leverage and a lot of smart contract and DeFi organizations within crypto that get stopped out and liquidated, causing the price to drop more. And you have to wait for that over leverage to be washed out of the system. Once it is, there's no one left to sell and it bounces straight back up. And people, can see to some degree where that leverage exists in the system by looking at where those positions are and estimating where it is at the bottom.
Hougan begins by distinguishing between initial and second-order effects in the market. When major macroeconomic shifts occur, the immediate reaction is often panic-driven, leading to sharp declines in risk assets. In the case of recent economic events, markets initially reacted negatively, pricing in fears of economic downturns, inflationary pressures, and rising interest rates, factors that traditionally weigh heavily on high-risk assets like crypto. However, the second-order effects present a different narrative. Hougan emphasizes that President Donald Trump's overarching economic goals include weakening the U.S. dollar, lowering interest rates, and reducing taxes. If he succeeds, risk assets, including crypto, could see a substantial rally. While market uncertainty remains a headwind in the short term, Hougan believes these policies could ultimately serve as a catalyst for long-term growth.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, I think you have to think about initial effects and second order effects. When we look at initial effects, of course, this was negative for markets and particularly for risk assets because people freaked out, assuming we were going to have an economic down, a pullback, higher inflation, higher rates, all the things that risk assets hate. And you saw that hit crypto in particular because, of course, crypto trades on the weekend when the rest of the market does not.
Yeah.
The second order effects, though, is what we have our eyes on. I think if you think about what Donald Trump is hoping to achieve, he's hoping to achieve ultimately lower dollar, a weaker dollar against other currencies. I know that sounds paradoxical with tariffs, but that his long-term goal is a weaker dollar, lower interest rates, lower taxes. If he achieves those ends, then that's going to send risk assets sharply higher. We think on balance, that's the more likely scenario. But look, anyone looking at this market has to admit that there's more risk and uncertainty than there was in the past. That's a headwind. Long term, I think it's going to end up being a catalyst. Specific to crypto, I think a lot of crypto investors are still fighting yesterday's wars. And yesterday's wars were all about macro. My actual view is that what's happening specifically to crypto matters more than what's happening on the macro side. So David Sachs' press conference matters more than the tariffs. But the crypto short-term trading environment hasn't yet realized that. So I think as they do, we'll start to see some of that volatility come out of the market and be more crypto specific. It's a little bit funny to talk about the macroeconomy and say what's happening on tariffs and taxation is so volatile and what's happening in crypto is so steady. But that's actually the case. That's actually where we are today. So look, we're in for a volatile period across multiple markets, but the long-term story from crypto is still extraordinarily strong, and the trends there are playing out over years, not over days. This is part of what crypto is and how it works, which is there is a news event that caused the price to drop. There's a lot of leverage and a lot of smart contract and DeFi organizations within crypto that get stopped out and liquidated, causing the price to drop more. And you have to wait for that over leverage to be washed out of the system. Once it is, there's no one left to sell and it bounces straight back up. And people, can see to some degree where that leverage exists in the system by looking at where those positions are and estimating where it is at the bottom. But this has been happening in crypto for time immemorial. The lesson to investors, this often happens on weekends, which are low liquidity periods, which is why this can be amplified, is unless you're a short-term trader, you have to just sit on your hands because it moves so fast and there's this cascading liquidation thing. And there are people at the bottom with that, you said, Brinks trucks waiting for the inevitable bounce. And that's just an old story in crypto. Yeah, I think Bitcoin's going to catch right up and then exceed gold. So it is the case that gold ran in this case. I don't know if that's investors imagining that foreign sovereign banks will roll off dollar assets and roll more aggressively into gold, which has certainly been a trend that we've been seeing. Perhaps it was just the type of investors who are in this market. Bitcoin's also has more elements of a risk asset, so it often has a one-day pullback. Right. But I think if you look in a week, my guess is that Bitcoin has outperformed gold and has more than caught up from that move. What I hope to see out of this press conference is a follow-on to the executive order where Sachs makes clear that they've put together this leadership committee, who's going to be on it specifically, what they're going to be looking at, how they're starting to think about regulation, how they're committed to the right for people to self-sovereignly own crypto and to be able to program in the DeFi space. I think that's what we can hope for. And if we get that, we should be very pleased. If we have good leadership with good organization and good fundamental philosophy, that's as much as we can expect 1 week after the executive order. I imagine that over the next 24 hours, crypto Twitter is going to tie itself into knots, expecting him to say the US is buying 1 million Bitcoin. And maybe that will happen, but I would be skeptical. So I think this is going to be, like another signpost that we're walking down the road where we want to get to. Washington moves slowly. This Washington moves faster than most. But even this Washington doesn't maybe go from 0 to 100 overnight. So I think that's what we'll see. I think it'll be progress, but I don't think it'll be a complete game changer.
Hougan acknowledges its recent struggles. He describes it as a contrarian play due to the network's ongoing debates over monetization and architecture. Despite this, he remains optimistic about Ethereum's long-term potential, citing strong Layer 2 growth and increasing adoption. He suggests that Ethereum's current challenges are more about internal governance and sentiment than fundamental weaknesses. Once the network resolves these issues, he expects renewed investor confidence and price appreciation.
I think Tom is pointing to what the Goldilocks scenario is out of these tariffs. The Goldilocks scenario is that we get a Plaza Accord 2.0, where other countries agree to weaken the dollar to make U.S. manufacturing more competitive. Maybe they agree to extend the duration of their treasury holdings to drive down U.S. long-term interest rates. At the same time, their economies weaken, so they come in with stimulus. If we see both sides of that happen, we're going to see, a sort of face-ripping rally in risk assets. And we think the probability of that happening is pretty high. I think that's what Trump is trying to engineer. Whether he'll succeed, we'll see. But I don't think there's I think it's a reasonable chance that that's exactly what we get, which is, dual stimulus to risk assets down the road. I think the altcoin space is waiting for this regulatory clarity that we've been talking about. It's waiting for a fundamental catalyst. I don't necessarily think we're going to see the kind of waterfall cycle that we've seen in the past, where money immediately flows from Bitcoin to ETH and down the capitalization spectrum. I think there's more specific interest in Bitcoin, specific interest in ETH, specific interest in Sol. So I think the market may have changed a little bit. One reason for that, Paul, is I think we've shifted from a market that's primarily based on speculation to one that's based on speculation, but also fundamental utility, right? You can talk about revenues in ETH, you can talk about users in Solana, you can talk about the fundamentals for many of these blockchains in a way you couldn't 4 years ago. So I think the cycle looks a little bit different now. What that means for you as an investor is if an outlier scenario happens, or you have a particular view, or you're listening to people and you're seeing photos of Brad Garlinghouse and senators, and you think that something is going to happen that's more than Bitcoin, well, that I don't think is priced into the market. So that's kind of how I think about it. I think about what my base case is, and then what the external scenarios could be. And I think that's how I view the market. Yeah, I have to say, when I look at that market and I look at, 2.5 or 2.1% fees on every transaction, long-term, it's a dead man walking. There's no way that stands. That's like markets trading from 9:30 to 4. These are vestiges of a prior age, and they have to be eliminated. That will be hugely beneficial for consumers, hugely beneficial for small businesses. Those profits are just going to shrink. So
Yeah.
what smart financial services firms are going to do is understand that that's going to happen and pivot to make money on other things. Again, stablecoins cost nothing to send. Tether makes $13 billion a year. There's still profits to be made, but not in the traditional intermediary sense of MasterCard and Visa. That game is over within 5 years, and we've shifted to blockchain rails. Look, I think ETH is a contrarian play in crypto. I think there are elements of the fundamentals of ETH that are extremely strong. It's directly exposed to the growth in stablecoins, in tokenization, in AI's use of crypto. It's the center of those trends, but it's been suffering from sort of a philosophical challenge it's been having on how to monetize that user growth and how should it structure its architecture. I think until it works through, I hate to use these words, but until it works through the bad vibes, which I think could take another 6+ months, I think it's going to be a challenged asset. For long-term investors, I think there's a strong fundamental case to be made for Ethereum long-term because the growth in users on layers 2s is phenomenal. The utility is really interesting, but it has to work through these sort of community bad vibes before it gets to the other side, and it hasn't done that yet. He's making big claims about how successful he is being right now at cutting spending, right? He's talking about getting down $4 billion a day, getting to the point where the US budget deficit is cut in half. Obviously, if that happens, that will give us space to lower interest rates significantly without sort of inflation picking up, and that will be very good for risk assets. I think we need to see sort of the receipts of that happening.
Yeah.
If the early indications are true and we're getting back to a more normal level of government spending, that is ultimately, in my view, extremely positive for all sorts of assets and is something we should be rooting for. I think it would be phenomenal, whichever blockchain they choose. I think it would be a proof of concept for something about the blockchain industry that people don't talk about, which you can have proof of information at a given time. So one of the reasons you would put this kind of information on the blockchain is it's stamped indelibly and can be available to everyone and can never be changed in the future, right? It's one way of the government not telling citizens to trust us, but showing exactly what we did when forever, that anyone can look into at any point in time and that they never have a chance to change. And so I think that would be a great thing for governments to do, and it would certainly benefit whichever blockchain they choose, just because it would be sort of a government stamp of approval for blockchain X, Y, or Z. But I do think it would be great to see it happen.
Hougan touches on the potential impact of fiscal policy changes. He highlights discussions about reducing U.S. government spending, which, if successful, could allow for lower interest rates without reigniting inflation. This scenario would be highly favorable for risk assets, including crypto. Additionally, he explores the potential benefits of government blockchain adoption. If policymakers embrace blockchain for transparency and record-keeping, it could provide a significant validation of the technology, further accelerating mainstream adoption.